It is often said that the stock market is made for the select few. It is made for the privileged. It is not made for the regular retail investor. And this is due to the fact that there's a significant amount of greed, corruption, as well as lack of transparency in the stock market. Take, for example, the financial crisis back in 2007, 2008. Banks, financial institutions, for a large part, were basically saved by the government under the moniker of too big to fail, while regular investors or people that own some of these houses effectively had to deal with all the consequences associated with foreclosures. And one could argue that whether it's the meme stock mania that took place a couple of years back, or whether it has to do with the rise of cryptocurrencies in the first place, it may have something to do with this lack of transparency that basically takes place in the marketplace, as well as retail investors basically going up against institutional investors to drive more transparency within the marketplace as well. But with that said, unfortunately, there has been this new case of a significant amount of lack of market transparency that basically took place in the commodities market, and that's what I'm going to talk about in this video. But before I get too far into it, don't forget to smash the like button for the YouTube algorithm, subscribe to the channel, ring that notification bell, and let's get into it. So why is nickel all this much of a big deal? Well, the fact of the matter remains that nickel is basically a key component for batteries that are basically utilized for electric vehicles. So as the demand for electric vehicle continues to increase, the demand for nickel is also increasing. And when you have this increased demand for anything, and in this case, this particular commodity in particular, the prices for nickel have also been surely but slowly going up. So this started large part back in 2021, but it basically accelerated quite significantly when Russia invaded Ukraine, because Russia produces over 20% of the nickel that is utilized in the global marketplace. Now, as the prices of nickel have been increasing, there unfortunately has also been an increased amount in the amount of shorts that are also taking place within the nickel commodity market. And this is in large part due to the fact that some people have assumed that perhaps this whole Russian invasion over Ukraine would be more short-lived than to last over a month at this point in time. Other people have also assumed, based on some comments from a leader, which we'll talk about in just a second here, that there have been some technological advances, and those technological advances will also drive down the prices of nickel, due to which a lot of people have taken on short positions when it comes to nickel as well. And that's in large part what this company, Tsingshan Holding Group, basically did. And if you don't know what shorting is basically betting against the price of anything, right? So whether it's the price of a stock or a commodity or whatever, you're basically assuming that the price of that particular thing is going to come down, which is why you short something. But that's not where it gets interesting. It gets more interesting due to the fact that Tsingshan is one of the largest miners of nickel. You think about it, right? These guys are basically one of the large producers of nickel, and now they're going out there and they're basically shorting the price of nickel. So that's like, think about that in the context of oil as an example. If you were a large producer of oil, you probably would not bet that the price of oil is going to go down. You would want the price of oil to slowly but surely keep going up. But that's not what these guys did. These guys are essentially betting that the price of nickel is going to go down, even though they're one of the largest producers of nickel out there. And that's what makes this story so bizarre. Why would this company essentially bet against their bread and butter, which is nickel? The story is that in 2021, the chairman of Tsingshan announced the development of game-changing technology that would enable cheaper intermediate-grade nickel to be used for batteries. The technology could expand the supply of nickel available for batteries and push down prices. So they started assuming a short position on the prices of nickel back in 2021, prior to the invasion of Ukraine by Russia. And this, if you look at the chart carefully, caused a significant drop in the price of nickel back in mid-2021. However, with the continued amount of EV demand that has been taking place, as well as this whole Russian invasion over Ukraine, it essentially shot up the prices of nickel. Therefore, in effect, creating this significant short squeeze, due to which the LME halted trading on nickel, as well as canceled a lot of trades. If you don't know what the LME is, they're basically the London Metal Exchange, on which nickel contracts basically exchange hands. The Wall Street Journal reported that Tsingshan would have owed $15 billion had the LME not suspended trading and canceled trade. Had the trades gone through, Tsingshan would have to deliver high-quality nickel to the LME and would likely require the Chinese government to swap its high-grade reserves with Tsingshan's low-grade nickel. Canceling these trades and halting the amount of trading that was basically taking place effectively protected Tsingshan and arguably to some extent Beijing as well. It's not unusual, by the way, to halt trading when you have a significant amount of price volatility, but what is unusual is to cancel the amount of trades that basically took place. So the question at its core would become, why would the LME do this? Why would they cancel a lot of these trades? Well, it's hard to definitively say, but what there is a hypothesis out is that the LME is basically owned by the Hong Kong Exchanges and Clearing Limited. And we all know that Hong Kong is basically part China, which is effectively run by Beijing. Now, the CEO of the LME has completely denied this particular accusation and has essentially cited systemic implications of the trade, aka too big to fail. However, not all market participants in the nickel trade consider Tsingshan to be too big to fail. They do not view Tsingshan to be that systemic to nickel markets. In fact, more recently, the company has come out and said that they would have been able to deliver on the contracts had these trades gone through. Also, while data is somewhat limited when it comes to a lot of these Chinese companies, there is prevailing news that would basically suggest that Tsingshan effectively has $30 billion in revenue on an annual basis. And that's not all. There are other rumors of conflicts of interest between the LME and the Chinese government as well. For example, the LME has sought approvals from the CCP leadership to open a metals warehousing on the mainland. And of course, a lot of people have this fundamental concern about the lack of independence between Hong Kong and Beijing as well. Needless to say, this amount of market manipulation has resulted in investors leaving the nickel market, and traders have exited their positions, driving down liquidity and creating reputational damage for the LME as well. Subsequent to canceling trades as well as the halting of the nickel trade, Tsingshan has been able to strike deal with its banks and avoid further margin calls, and now that trading on nickel has resumed, they have purchased contracts to reduce the risk of the short position. Basically, they've gone long on nickel. Additionally, the LME has now introduced price limits to reduce the amount of volatility that some of these commodities basically experience. What's interesting to note here is Tsingshan is just one player, and of course they did assume this substantial short position when it comes to nickel, but there are other players as well who have also assumed, so it's going to be interesting to see what the fallout of this whole thing is going to be when this whole thing is said and done. For example, Wisdom Tree recently shut down their nickel 3X daily leveraged exchange traded commodity fund, which zoomed some 600% earlier this month. Once the market reopened, nickel prices dropped to the maximum limit daily, thus completely hammering this fund. It would certainly appear that manipulating the prices of nickel has basically reduced some of the losses that Tsingshan would basically have to deal with. It really brings up the question in terms of market transparency and how efficient the market really is. Anyway, now it's up to you. What are your thoughts when it comes to the transparency in financial markets? Include all of that in the comments below. I hope you enjoyed the contents of this video. Remember to like, subscribe, and ring that notification bell, and I'll see you in the next one.